Generally, we all are aware of market cap based index funds like large cap, that is Nifty or Sensex index funds, as well as mid cap and small cap index funds. But the universe of index funds is quite large, and there are more than 8 types of broadly classified index funds available in the Indian market. Here also, each type will have a subtype of index fund, which makes the count as big as around 30 types of index funds. So, in today's video, we'll try to understand this different type of index funds, especially a very interesting category of index funds, that is factor-based or smart beta index funds. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the types of index. First, broad market index funds. These are one of the first index funds introduced, which basically represent the overall total market, which includes the popular ones like S&P 500 and Nifty 500 index funds. Second one, market cap based index funds. These are one of the most popular index funds in India, which are classified according to the market cap. These are broadly classified as large cap index funds like Nifty or Sensex 30 index funds, mid cap index funds, and small cap index funds. Also, there is a micro cap index fund also now available. Third one, equal weight index funds. Generally, weightage of stocks in an index is based on its market capitalization. But here, irrespective of the market cap, equal weightage is given to each stocks. For example, there are 50 stocks in Nifty 50 index. So for this fund, each stock is given a weightage of 2% only. Fourth one, factor-based or smart beta index funds. This is a very interesting category of index funds. Here, the funds are designed based on different factors like momentum, volatility, quality, value, etc. In the later part of the video, we'll do a detailed discussion on this category of index funds. Fifth one, strategy index funds. These are the funds which replicate strategy indices, which in turn are constructed using quantitative models and investment strategies. For example, one of the strategic indices which exist is Nifty Dynamic Asset Allocation Index. This type of funds are in a very nascent stage. Sixth one, sector-based index funds. These funds invest in sectoral indices like pharma, technology, banking, healthcare, etc. Seventh, international index funds. These are the funds which replicate the international indices, especially the US indices, S&P 500, Nasdaq, New York Stock Exchange, FANG Plus, etc. Eighth one, debt index funds. This is one of the least popular category in India. The fund in this category try to replicate debt indices like gilt and long duration debt. Now let's look in the details about the smart beta index funds. Firstly, we'll quickly look at its types and then we'll do a detailed analysis of each type. The smart beta index funds are broadly classified based on first, value, second one, momentum, third, quality, fourth, volatility, fifth, dividend, and the sixth type, funds with multiple criteria from the above. So let's deep dive into the first category, that is value based funds. The value factor is probably the most documented and definitely the most studied of all factors in the investment industry. The funds are generally based on NSE's Nifty 50 Value 20 Index. The stocks are picked on basis of their value. The stock is selected on basis of their fundamentals such as profit to equity ratio, profit to book ratios. They aim to maximize smart beta of the fund by investing in diversified stocks which hold value and have strong fundamentals. Now let's look at the performance of this Nifty 50 Value 20 Index. If you see, it has given an annualized return of more than 17% for a 5-year time horizon. And if you further dive into the data, it has been observed that this index has performed better than Nifty 50 during the bear phases. The standard deviation of this index is around 18%. Nippon India Nifty 50 Value 20 Index Fund, which has been launched in February 2021, is the fund which tracks this index. As stated earlier in this video, smart beta index investing is a newer concept and there are very few funds or ETFs tracking these indices. Now let's look at the momentum based index funds. These stocks are picked from NSE's Nifty 200 Momentum Index. Momentum based funds aim to invest in stocks which have rallied or have shown consistent momentum based on their 6 or 12 months price returns. The fund manager assigns weightage to the stocks based on this IQ and judgment of the stocks. The list of momentum funds is updated on a half-yearly or yearly basis. The fund also timely exits a stock when that particular stock loses momentum. Now let's check the performance of Nifty 200 Momentum 30 Index. The index has performed quite well and has given an annualized return of more than 23% over a 5-year time horizon with a standard deviation of 19.5%. Bandhan and UTI fund houses have index funds tracking this index and have launched funds since September 2022 and March 2021 respectively. Now let's look at quality-based index funds. These funds pick stocks from indices such as Nifty 100 Quality 30. The stocks are picked on the basis of their quality, is based on a score, which is established by analyzing the last 5 years return on equity, that is ROE, financial leverage, debt to equity ratio, and earnings, EPS growth variability. Factors such as profitability, stable earnings, and lower leverage are taken into consideration while picking the stocks. These indices are rebalanced semi-annually. Now let's look at the performance of Nifty 200 Quality 30 Index. The 5-year annualized return of this index is 17.2% with a standard deviation of 15.7. SBI Nifty 200 Quality 30 ATF is the fund which tracks this index, which has been launched in December of 2018. Now let's look for the volatility based index funds. In general, it is perceived that if one takes a higher risk, it is likely to get higher returns. Yes, this may be the case most of the times, but that is not always true. Many studies have shown that low risk stocks tend to perform better than high risk stocks. And keeping this into mind, the Nifty 100 Low Volatility 30 Index has been designed. Here, the factors like standard deviation and beta are considered for the fund. Now let's check the performance of this index. The index has given a moderate return of close to 17% annually for a 5 years time frame with a standard deviation of 15.2. Just 1 year back, Bandhan Fund Houses launched a fund tracking this index. Now let's quickly look at the pros and cons of this Smart Beta Index fund. Firstly, the pros. First one, as these funds are different from traditional funds, they provide that additional diversification to the overall portfolio. Second one, as the performance of this fund are somewhat inversely correlated to conventional funds, it can provide the necessary hedging to the overall portfolio. Third one, being passively managed, the expense ratio are low, which increases the overall returns of the fund. And the fourth one, with inclusion of this Smart Beta Index fund, which has a potential to generate that extra alpha, one can boost the overall returns of the portfolio. As like any other products, the fund also comes with some cons. Let's look at them. First one, as the funds are in nascent stage and are having less AUM, it can have liquidity issues. Second one, due to being newer in the market, long past performance data is not available, which is instrumental in boosting one's confidence in the performance of the fund. As stated earlier also, the concept of Smart Beta Fund is in nascent stage, and there is lot of scope for research and development of these indices. Over and above this 4-factor based index fund, there are also funds combining more than 2 factors. But not to stretch this video too long, I will make a part 2 of this video where we can discuss in depth about the yearly returns generated by these indices and also discuss about other multi-factor index funds and also discuss which fund one should select. If you have found this video useful, do give a like to this video and also share this video with other friends. And also subscribe to my channel if you have not done till now to watch such interesting videos in future also. Thank you and see you again next week in my new video.